Hello, YouTube. Justin here. I am ready to flip back to being bull. I am seeing a pattern setting up, which I have set up right here, which is telling me that maybe the worst is over and the bulls might be ready to reclaim control on a quarterly basis, which means by the end of the month. So on this channel, I've been talking at length, at least for the last few months and into late last year, about how I thought a bear market of 2022 might be unfolding. And now I am seeing evidence that tells me that maybe it's time for us to stop trying to bet bearish, get ready for the dip, buy the right dip, and then make some money to the upside. So if you're enjoying this video at any time, please smash a thumbs up and drop me a comment at the same time. Are you guys still bullish? Are you still bearish? Or are you unsure? Market uncertainty is really high right now, and fear is also quite elevated. So it's a tough market. And I think that this weekend, I'm going to try to provide the flip side to the narrative of why we might be in a bear market crash of 2022. So this chart right here is very, very, very simple. This is a quarterly chart, which means that every candlestick is going to be the equivalent of 3 months worth of trading. We can note over here that in the most recent period, or the yellow box that I have highlighted here, we have 1 quarter that goes down. What's really notable about this is just the pattern formation compared to the last 2 times. So here we have a crash going into 2018. Here we got a crash in 2020, and now we got our crash of 2022. So what's really interesting to me is just what the candle actually looks like and the duration of how long the dip actually lasts. So looking back to 2018, what's notable here is we have a candle of indecision, which is a doji. Same thing we had here. Then we push higher, and we ultimately go down. We not only engulf the previous bar, we engulf the previous bar before that. So this red candle absorbs or eats the whole previous 2 candles. And then into the new month, slight gap down, pump up, new all-time highs. Same pattern sets up here, where once we start a correction, we take out not only the first candle, the second candle, the third, and the fourth. So if we're going to be going into a big, massive drop, it's already beginning in March. We're already into the end of the quarter. I think it's a little bit late for us to get this move right here because we heard from Jerome Powell this week that a 25 basis point hike is all we're going to be getting on March 16th. And right now, with all the uncertainty what's happening in Europe, I don't think they're going to want to rock the boat. So again, this pattern right here is super, super, super simple for me. It tells me that potentially into the end of the month, if we can hold up, and what I mean by hold up is the candle looks similar to here, where we don't lose the low that's already been established. And the low that's already been established is at roughly 421. Over here, again, we did close below the candle, so there is potential for us to actually push down. But if into the beginning of April we start to advance, I'm going to believe it, and I'm going to be flipping bullish. So to re-summarize one more time, we've only had the last corrections that we've had have only been 1 month, and then we go back up for minimum 2 quarters. So the next way to look at this is going to be a quarterly chart with a candlestick and an uptrend. So right here, again, this is going to be that same pattern. It's a quarterly chart. And we can note here that we have an uptrend. We're perfectly bouncing off of it. And this area right here at roughly 428 to 430 is super important. That's where we're set to open up this next candle going into the beginning of April. And if that holds, we're probably going to be advancing. That is the simplest way for me to understand, and explain it to you. Now I'm going to go through some of my supporting evidence to show you the reasons why I'm thinking this way. So what I'm basically looking at here is what else have these bears got? Like literally what else is there left for us to be bearish with? We heard about Jerome Powell this week. We heard about the first meeting being 25 basis points. The next one's meetings with an S, potentially being 50 basis points. We heard about potentially World War III. And there was a nuclear power plant that got attacked, which can mean devastating impacts to the rest of the world. The reason why this is particularly interesting to me is because of the monthly chart we're going to look at in a moment, and the fact that the news that surprised us on Thursday overnight into Friday happened overnight, which means that it was during an illiquid market on the E-mini futures, and the low held. That was very incredible. The reason why it was incredible is because this is pretty much the worst case scenario. Peak hawkishness, tightening of monetary policy, and at the same time, we're now seeing that growth is now in question. So I literally do not know what else they can throw at us. They even threw the kitchen sink at us bearish this week. And as we reviewed in previous weekend videos, the put flow is substantial. There are so many puts. There's puts on Friday. There's puts out for the March monthly. There's puts outs for every expiry. So If the bears literally got the perfect storm of bearish rhetoric and we're not moving lower, what else is there left? That's the big question. I think this week, for myself included, what happened is that we had a big re-rating in terms of TINA. And what I mean by that is in times of uncertainty, people flock to what they think is safest. That ended up being gold, ended up being the dollar. And as of right now, it looks like there's still no alternative to the US financial system. We saw that with SWIFT. And when Russia got kicked out, it was pretty much that's over. So what else is left for this week? Most of the stuff is going to be coming on Thursday. And these key dates here are going to be very important as we think about closing out the quarter, which is going to be closing out the month of March. So I personally believe that the conflict that's happening in Ukraine and Russia right now is coming. We're closer to the end than we are to the beginning. And I say that because this is a costly endeavor, not only politically, but also for your economy. And I think everyone is now on edge. We saw the big rhetoric change on Thursday regarding that power plant. And we just can't afford to do this very much longer. So I don't know whether we will get the resolution for Russia and Ukraine before the 16th, which is going to be our FOMC meeting, or after. But I think that this is going to be potentially a really big deal for us. Right now, we are expecting the worst case scenario. And if we get anything that's not the worst case scenario, we saw what happened, a 2% rally when Jerome spoke on Wednesday. So there's nothing really major happening until Thursday, where there's going to be a plethora of data. We're going to have the European Leaders Summit, European Union. We're going to have the ECB rate decision. I think they're also going to pause their hawkish rhetoric. We got the CPI data print, which is going to be the most important data print for me. But I don't think it's going to change what we're set to hear on the March 16th, because Jerome revealed what he wants to do. Initial jobless claims on Thursday, and then a follow-up meeting with the European leaders on Friday. And all this happens before we have that FOMC meeting in OPEX next week. So I think the reason why we're likely going to have resolution in Europe is because these European leaders are scared. The potential for having another Chernobyl does not just impact Ukraine, it impacts Europe especially, but the whole world. And the whole world is united right now in trying to have some kind of amicable resolution and for us to just get on with everyday life. So I think that's particularly important for me. As we move forward to the potential bull and bear narrative here, and then we're going to look at the charts to know what the feedback was. The bull thesis here is that the monthly bottom is in. And what I want to point out here is just going to be the monthly pattern here. And we can look here at our monthly chart, and we can see that the level that's been established here for the low of the month is 427. That is going to be lower than that 428 to 430 base we pointed out on the quarterly chart. So what I'm trying to point out here is that if this low holds at 427.11, that is our weekly low, and it is also our monthly low. So if that low holds, meaning the monthly bottom is in, it means that this monthly candlestick is going to break bullish. We're going to get back above 438, and we're going to start to advance. I don't know if that's going to happen, though. Again, monthly bottom is in. It just means that we're not going to revisit it. We can also technically break this downtrend by just going flat into next month and the beginning of next quarter, which is going to be that quarterly chart we looked at. Again, peak hawk and geopolitics. So Jerome Powell did dial back some of his some of his hawkish rhetoric in saying that only 25 basis points. We're going to be mindful of what's happening to the market, and geopolitics are very uncertain right now. And again, what else? Literally, what else is left? I don't know. Bearishness. The wheels are in motion. We are at peak cycle, and the inflation narrative has dramatically changed. So I think that all of the bearish potential here is kind of getting fizzled out when we look at the charts. So I think what we can do here is take a break to look at the charts really fast to understand what this means for us. In terms of surprises, we also have the geopolitics. Again, that's the potential. It could be any day. And then the European Leaders Summit. CPI is going to be important, but I think that right now the market is more fixated on uncertainty regarding geopolitics than actually the data prints. So if we were going to be at peak hawkishness and Fed rhetoric, what I want to look at here is going to be just a quick chart. So we can look here at our weekly chart. And again, there's a lot of lines on here. What I'm going to do is actually hide all of them. And I'm going to show here that the open for the week is at 432.23 and the close is at 432.17. What this tells me is that we are as bearish or as bullish, meaning basically neutral, from where we opened on Monday. We did a whole bunch of movement during the week, but by Friday close, we closed out where we opened on Monday. This tells me that the market is finding some support. Why? We open and close at the same price, and there were some nasty surprises this week. Some bullish, meaning Jerome Powell, some bearish, what happened with Putin, and here we are, basically unchanged on the week from where we opened. The second thing that's particularly notable to me, which we will review a little bit later, is going to be how we formed our Friday candle. So our Friday candle here, again, we open at 431.69 and we close at 432.17. So last week we spent a lot of time talking about a dragonfly doji. That's a dragonfly doji. So the broader market, meaning the S&P, held the monthly low, which was established on Tuesday at 427.11. It held it. It closed higher than it opened on Friday. And the most important thing for me is this one right here. I've been talking a lot about this level right here. I'm going to jump forward for a second here. We've been talking about these bear market targets, and 432 is our 10% drop. So what we mentioned last week is that we have not yet closed a weekly candle below 432. So if the bears are really in control and there are so many puts, why could they not get this on a weekly close below 432? So if we just quickly look here at the charts, again, let's go to a clean one here. And right, this roughly 432 area here, we'll point out, we've not actually closed below it. Last time we closed below 432 is all the way back to roughly June of 2021. So although we did spend time below the 432 area, we did not close below. The closest we got was the week of February 18th, where we closed at 434.23. And technically, we're only a few cents above 432, but that's a save. And with the potential that we had this week, I am quite impressed by these bulls. These bulls really showed up. And the reason I say that is because we looked at what happened in Germany. Germany and Europe are in a devastating mode right now. Their stock markets had their worst drop. I think it was 7 or 8% for the DAX, going all the way back to 2020. So if the US held up, that tells us that there's no alternative. And if bad news cannot move us the way it used to, what could good news do? Move us up. That's what good news can do. Good news can move us up dramatically higher. So as we move forward, next thing I want to look at here is going to be the motivation for options. I'm going to pull this forward here a little bit sooner just because I think that us understanding where we are at with the options going into OPEX next week is going to be important, because with a doji candle and with a put call ratio for the S&P ticking back down to the mid ones, meaning 1.34, we actually see the VIX up, but the put call ratio for the S&P down, which means that people are buying 1.39 puts for every call. I'm going to quickly go through these options, and it's going to be about 2 minutes. I just want to point out that as of right now, I am seeing that there has been no substantial volume or changes in open interest for this next week. 4:30 for Monday appears like max pain. So that's roughly where we are. Into Wednesday, it's muted with continuation, where we see roughly 435 to 440 and 430 to 425 is max pain. So if these levels hold, and again, here we have it out to Friday as well, which is going to be the 11th, it's muted, but there is continuation and there is bear open interest. That's what I note here. Looking out to the March monthly chain for S&P, there are definitely more puts. I see 435 as max pain. And that is going to be going into next Friday. Looking at QQQ, again, it's quite muted. Same thing. It's roughly at the money to out of the money. Same thing for Wednesday, very muted. Same thing for Friday, also muted. And then the March monthly expire for QQQ, it's roughly 340 for max pain. So what this means to me is that the bears had all of the potential for the last week to try to drill these charts down, and they just were not able to. So it's very, very, very notable. The dollar also had a dramatic move higher this week, which means that added pressure to U.S. equities. Anything that's dollar denominated, meaning priced in dollars, saw a big bid. So now we're going to move forward to our bull section here. And this one's not all that difficult to go through. So I think looking here at, is the end almost over? It appears like it is. Even if we push lower, I think that the bull case for me is going to be very simple. The bull case is this. So if we are able to hold our monthly low here at 427, I don't believe we need to go back down and retest these previous lows that we established in January and February. However, if we print below 427 for this week, I believe that there is going to be a higher probability of us testing at least the low 420s to potentially back down to about 411 than not. If the bulls were defending on Friday but not defending early next week, it means that they're likely losing some steam. The reason I say that is because as I look back over to here, our bearish pattern did not validate. We're right on the green line, green of support. We put in a higher low versus the October low here at 426. I would also note that as we look here on the ES chart, this is going to be the E-mini futures, which trades continuously during the week. This one right here is also giving us a clue here. So I'll spend a few minutes here and just laying out my bull thesis. And oops, let me go back to here. Just jumping through the slides again. So looking here, before we got our big surprise coming in overnight on Thursday, what we were doing was building up pressure. We can see that we have this dominant downtrend here, which is adding a level that's been an impenetrable fortress for us for the last while. And we actually did push up here back above 440s, which is going to be our 50 weekly moving average. So looking here at our 50 weekly moving average, we can see that we pushed all the way up, tested that blue line, and that's at 4403, but we weren't quite able to hold it. So as we look back here to our daily chart, what I want to point out here is what we talked about earlier during the week. So as we look here, in my opinion, the reaction that we saw into the close on, actually, I think I want to go over here. Let's go to the close on Friday. So there was so many puts. And what I noticed is that every time we came back down to roughly 430, they bid it up hard, bid it up hard, bid it up hard. And into the close, they power pumped this thing. So we're sitting here at about 430, and they jacked it up by about 2%. I could feel it. I could feel the tape getting bullish. And what I mean by feel is that it's the way the price action works. It's the volume. It's the price. And we can note here that the red candles just started getting so small, and the green candles started getting bigger, which means that the bulls are willing to buy not only at 430, 431, but also 432 and higher. I saw pressure building up here and then finally got released into the close. It's the same thing I see setting up here on the E-mini futures because this thing trades continuously. And what we were pointing out over and over was just that we were setting higher highs and higher lows. So ever since we established this low right here at the 24th of February, we put in a higher high, higher high, higher high, higher high, higher high. And then what do we do on the low side? Low, higher low, higher low, higher low, higher low. And then we broke. So the pattern for me is still close enough. And what's really notable is that when we push down to our low on Friday at 4281.25, it is it's actually a higher low versus the one that we put in on Wednesday, 4278.25. What do we got here? 4281. So basically, the higher lows held. And what I think is very notable is that we are building up pressure to get to this 50 weekly moving average here. So we have our big move lower. We get up to the 50. We open the week up and push off down, and we're digesting it. We also have a higher high and a higher low here on the weekly chart. So we had our lower high, lower low, lower lows. Now we're breaking the chart. So if we're currently building up pressure to get over that $4,400 area, it could be all the way into the end of the month, but I believe it's coming. And just going sideways and holding the pattern here is likely going to be enough for me for the next little bit. In terms of the rest of the bull narrative as well, I would also note that the market is currently in extreme fear. So the market's currently in extreme fear. And again, the previous close is in extreme fear. We spent a little bit of time in extreme fear last week, but this max fear could take potentially another week or two to fully materialize, give people a chance to sell the bottom, and then we can move higher into April. And the reason why it's also bullish is because extreme fear means that people are very scared. They're ready to sell. And everyone who was worried about the Fed had a chance to sell. They've had about 2 months to sell. Everyone who's been worried about what's happening in Europe right now, everyone knows what's happening. It's everywhere. It's on every news channel. Everyone's talking about it. Everyone's had a chance to sell. So the lows that are established, in my opinion, are very strong support. Next thing I would look at here is just the mix of the market. So for this last week, we can look at two things to get a gauge for what the market's doing as well. What's red? What's red is financials, because we're seeing that there is a repricing in the rate hike expectation. The financials are bloody red, right? Down by 9, 10%. Berkshire Hathaway did pull ahead. But the next thing I want to point out is that TNX, or the 10-year Treasury note, also took a notable tick down on the week. It's down by 13% and 6% on Friday alone. So what this tells me is that the 10-year note also repriced at the same time that we saw financials tick down. That for me means that it's bullish. That's the easiest way to explain it. So I'm seeing a lot of bull sentiment, and all we need is that for that continuation to happen, and for the relief to turn into more than relief. Right now we have relief because we bounced up. For it to turn into a reversal, we have to close above the 50 weekly moving average. All right, there we go. Let's talk about these bears. The bears are still impressive, but I believe they are losing some juice. Again, the bear case for me is that on March 16th, we're going to be hearing about balance sheet runoff. And every time the Fed has reduced their balance sheet, the market has gone sideways to down. So when they start to slowly reduce the balance sheet, the market goes sideways to down. When they start to reduce the balance sheet, the stock market crashes. So I believe that after this last week, Jerome said specifically something that I picked up on, basically a third mandate. He talked about price stability, full employment, but then also stock market stability. In terms of inflation, he said that that's not really my department. I can't influence inflation, even though that's his job. But what he said is the market priced in what we think is going to happen here. The market did its job and repriced the Fed hike expectation. So I think that there is now the potential for him to dial back a little bit of rhetoric. But again, got to get that confirmation when we have the FOMC. So that's the potential for the bears. The second potential for the bears is that we're at the peak of the cycle. As I mentioned in the video regarding the key dates for this week, for me to know that we're actually going to be continuing lower, we have to print a monthly lower low. So for us to actually self-fulfill the lost decade, we're going to have to lose the monthly low. Let's go back and have a look at what that means. We look here at our monthly chart, and we see that our low right here is at 427.11. That would be a bear break. It would be back below the green line, which is going to be our quarterly base. And that means we're probably going to be testing 421, if not 410s, and potentially even down to that bear market target of 384, a 20% peak to trough drop. As we look further to here as well, we can go to our quarterly chart, which is this one here. And again, this is a three-month candle. If we're able to just open up flat, roughly 428 to 430, I think we're going to advance. I see a very strong possibility that we could advance here. And again, the fundamentals align with the technicals. So the bears are going to have us below this monthly low into the next one. Because if we only have 1 month that's red and the next one opens up green, we usually go up. Again, 2 red months and then a bigger expansion. Going back to here, we're going to have some nasty red candles for us to truly go down. And all the potential is not really materialized on the charts. In terms of the bear market targets, I think that everything got repriced pretty fast this week. So we only made it down to about 430, and where I believe there could be some volatility is going to be when we look at the seasonality chart. So I'm going to pull this up for a second here. Let me make sure I got the right one. I got this one here. All right, perfect. This one right here. So we can have a look here at our open image in new tab. This is going to be our seasonality chart. And the reason why this one matters is because sell in May and go away. So let me see if I can find the midterm election 2022 seasonality chart. So I think that the peak to trough, we normally get about a roughly 16-17% drop during a election year, sorry, midterm year. And is this it here? Here we go. I think I got it here. Open image in new tab. I didn't actually have this prepared, so I'm just going through it right now. I'm winging it. Oopsies. Oops. Zooming on the wrong one here. Let's zoom in here. So what we can notice that the midterm year is what we have here. So sell in May and go away. That's what it looks like here. So I think that into March, again, we're clearly not going up into March. We're just starting the month off. We're roughly here at our low. So again, going back to our monthly candle, if the low is in, we should be able to start advancing from here, which means the low is in. So looking at our midterm year, again, March, we go up. And how this could happen for me would be we could get double relief. We could get relief from Jerome Powell when we actually hear about the March 16th meeting, where we're only going to be raising by 25 for reals, and the balance sheet runoff will not be as aggressive as what we've heard before, like what James Bullard said and then got walked back. And if we look back to the chart here, sell in May and go away. Why? If we get relief about Europe, that's likely going to cause a rip, maybe something like this. And then after we hear about quantitative tightening beginning and it actually going underway, and we're going to see more inflation because the supply chain and the global economy is under pressure right now, that could be the move for us lower here before ultimately going higher into the end of the year. If you look at this from a normal perspective, sell in May and go away. Right? So sell in May, go away, come back on Labor Day. So what are we going to do exactly? I'm not entirely sure. But if we're going to be moving lower, we're going to find that out into early April as well. So in terms of the bear catalysts, they have to start drilling us lower. We can't just be hovering over here. They have to take us down. All right, let's move forward. So again, this is a process that usually lasts a period of 2.5 years when they actually do the balance sheet runoff. So they're not going to be aggressive. They're likely going to be less aggressive than they were in 2018, right? Whole bunch of nothing for a while here and then finally going down. So that would be the relief from the balance sheet runoff. All right, now let's go forward and have a look at the S&P charts. Let's just make sure I didn't miss anything. There's some options we want to go through in a moment, but I talked about it before. So the quarterly chart for me is going to be a very important one. If the low holds here at roughly 426.37 and 421.97, the lows have been tested. And we already got those out of the way. We tested 421, didn't we? We tested 411, didn't we? And on this new month, we've already tested that 426. So there we go. On this new month, we got 427.11. That tests and holds. On the weekly chart, here we can note that, again, we are still trending up. We're on our lower uptrend, so we can't really afford to hang out much longer. Otherwise, this blue triangle here is likely going to drill us down to not only test the 420 low, but probably retest that 410 low. So again, the bearish rhetoric is here as well. Looking at our daily chart, we were trending up. We were setting those higher lows, and now we're not. We do have our long-term uptrend, which goes back to our all-time high connect, all-time high, and we're still above it. I'm noticing a short-term uptrend here as well. So looking for those levels to hold, specifically into early next week, because we don't know what's going to happen over the weekend. Finally, looking here at our hourly chart, the first thing I want, the first thing I want to point out is actually going to be our calendar of events. So we can look here and see our key dates for the week. Again, Thursday is the day. We got Thursday pre-market, we got Thursday pre-market, Thursday pre-market, Thursday pre-market, and then we got Friday for the EU's Leader Summit. So as we look back to here and we look at our hourly chart, the reason why it's important is because as we land right here, I got a 3 p.m. test on Thursday afternoon for basically holding where we are right now at about 432. And as we noted before, 432 is the correction territory for the S&P. So if this micro uptrend here is going to hold, we're going to find out into Thursday close, which is going to tell us whether or not these events by Thursday close and confirming into Friday are going to be giving us that bullish or bearish confirmation. That is it. Moving forward to our next section here, I believe we've got the ETF. So we did talk about the Dragonfly Doji pattern on the daily chart for S&P as well. And I'm quite impressed. As someone who has been big bad bear for the last couple of months, we have to know when we are seeing evidence that tells us that we are wrong. And right now, for us to get fresh bearish continuation, the bears should have taken control on Friday. They didn't. They were unable to get a weekly close in correction territory since I don't even know, since like 2020. So the bulls got it. Bulls got it. Let's go. Moving forward, let's look at some ETFs. So first thing I want to look at here is going to be a couple of the major ETFs. Then we're going to look at some of the trillion-dollar companies as well, because I still think those ones there are very important for a gauge on the market strength. Looking at QQQ, we're going to spend an extra minute here because it's more important. QQQ has been softening. So as we look at the trillion-dollar companies in a moment, that is going to really matter here. So on Friday, we did break the pattern of the S&P, where we can see a lower low and a lower weekly low and a lower monthly low. So as we look back here at our monthly pattern, Where are we resting? We're resting basically right around our green line, roughly 337. So we have to maintain that 334.92 low, basically 335. Otherwise, if we can't hold on to 334.15, we're probably going back down to 320. QQQ will be very important for us to look at because it's the biggest component in the S&P, and it's going to provide clues. Looking here at our weekly chart, we are already in that megaphone lower, or the blue descending triangle, and the potential for the S&P to follow here. We did get a pretty hard rejection at 350 as well, and just unsure on where we're going to go. Looking at our daily chart, again, we're right here throttling on the green line again, which is going to be our previous all-time highs. And I don't know where we're going to go. We're either going to go up, down, or flat, and I'm ready for any one of those scenarios. I want to contrast the QQQ by looking at XLF. And the reason why I want to do that is because QQQ set a higher high and a higher low. Is this candle beautiful? Of course not. It's an inverted hammer, but it's above the green line, and it put in a higher high and a higher low. Technically speaking, that is bullish. We close at the low of the week on low volume, which means if we're going to go back up, we should not break that low. Flipping over here to XLF now, what do we got? We got lower high, lower low, closing below the 50. Interesting. 36, actually, sorry, double bottom. So we got a lower high and a double bottom to the cent. So this is actually bearish because we can confirm it by the volume. So generally speaking, when financials go down, technology goes up. I want to see that fulfill early next week. Looking here to the other major ETFs, we've got XLV, massive power up, pushed strongly off the 50 weekly moving average and off our uptrend. Next thing we're going to look at here is going to be the DIA. So the Dow, again, higher high, higher low with a tight doji on low red volume. Looks pretty bullish to me. Moving forward here, we're going to look at IWM. The Russell, higher high, higher low, down by about 2% of the week. It'll technically break its downtrend by just going flat next week. So if it can open up flat at roughly 200, it should break that pattern. Next one we're going to look at here is going to be ARK. So for me, when the riskiest assets are still providing clues here, again, we were down 11% of the week here for ARK, higher high, higher low, but this chart does not look pretty. It's looking like it's rough, and it's not RSX, but still looking pretty rough. So we got to keep in mind, we have to keep in mind what this chart is telling us for the next week here. Next ones I want to look at are going to be, let's look at RSP. So equal weight S&P 500s, again, tight doji, just like the Dow. So equal weight S&P, which provides equal weight to all the stocks and not just tech. We can see it's roughly unchanged. Pretty impressive. Next one here is going to be XLU, which is generally going to be a risk off where people are fleeing to safety. We're almost ready here for a fresh all-time high. It's almost up 5% on the week. If it's going to power up, that is likely going to take some of the juice out of the tank for tech. Next thing we got the NYSE here. So NYSE has an inside bar, right? Not quite sure exactly what's going to happen here, but it doesn't look terrible to me. Not yet. We look at Bitcoin. Bitcoin's actually price discovered nicely here. So on the weekly chart, we can note that we're still going up. We are in a tight triangle or a blue pattern here, and we're settling green as I'm recording the video. So that looks pretty bullish to me. Finally, we want to look at gold. So looking at gold here, gold is powering up. Gold is powering up massively. It's almost got a fresh higher high here on the month. It's got to go above $3, $4 higher. It'll take it out. And looking here at our monthly pattern, it's already back above the 2011 all-time highs. So if we can clear 2,000 and 2,100, it's probably going to start advancing. There we go. That is probably all the major ETFs that matter. If there's one that I missed that you really care about, make sure to drop me a comment. Now we're going to move forward to the trillion-dollar company to know whether or not the leaders of yesterday are still the leaders of today and can drag the QQQ kicking and screaming higher. Looking here at Apple, again, this has been the bellwether of Berkshire Hathaway's portfolio. And what's interesting to me, the first thing I notice is that we look at these candles here. We look at where the real body is. Tight for the last 3 weeks. The real body is basically where we opened, within a few cents of each other. 4 cents for the week of the 18th. Last week, it's within 1 cent. And then this week, it's within 15 cents. less than a 20-cent range on a $160 stock for the last 3 weeks. It's basically throttling 162 to 167. It's pretty tight. Still above the 50 MA, still above the green line. It looks fine to me. Higher high, higher low. Here we got Tesla. What do we got? Higher high, higher low. And it looks just like Bitcoin, where it price discovered higher and settled green above the 50 weekly moving average. The only other name that closed above its 50 weekly, again, also formed a higher high and a higher low as NVIDIA. So NVIDIA is saving its 50 weekly moving average. It's still in a downtrend, but again, higher high, higher low above the 50. And the volume's not that elevated. Looking at Microsoft, again, higher high, higher low below the 50 weekly moving average. Okay, here's where we start to see a divergence in pattern. Looking at Amazon, higher high, what do we got here? 3079, higher high, higher low. It's a nasty candle, but it's a higher high and a higher low. And as we look over here to the heat map, this will give you a visual representation of what I'm trying to say here. Although we see deep red over here and deep green in energy, utilities, as we noted in the charts, and healthcare, tech is not actually all that bad, considering how red financials were. Apple's down 1, Microsoft's down 2.5, Google's down 1.8, Amazon's red, offset by Tesla. But for the most part, these charts are holding up. Looking at Google, again, back below the 50 MA, but a higher high and a higher low. All right, noticing the pattern yet? I hope you are. Facebook, dumpster fire, right? Bear pivot off of the green line, but it's got a higher high and a higher low. Impressive. So if these weekly lows can hold, there is a strong chance the bulls can actually defend it. So again, we briefly touched on the options before. I want to look at one more thing here. This is going to be on our platform on blaze.tips. And I'm going to go all the way back here to Monday. The reason why I want to show these ones here is because I want to show that as the week started to where we finished on Friday, let's actually take a step back here to make sure we understand this, because options are nice to look at, but we need to know why we're looking at them. So again, look here. We opened at 432.23. We closed at 432.17. That's the weekly chart. On the daily chart, on Friday, we opened at 431.69. We closed at 432.17. So what this tells me is that the levels that we had on Friday going into Monday and then fulfilling into Friday were the same. It's roughly 432. So the way people are positioned and whether or not they're going to get paid really matters to me, because we're finally seeing some bear and bull divergence with pretty big dollar flow. So what I want to look at here is actually going to be the strikes here that have, I'm going to zoom in a little bit to make sure it's a little bit easier to see. I'm looking at, first of all, these are for the top 25 indices. ETFs and individual stocks were all muted. I'm looking at the top strikes for SPX. I'm ignoring VIX. And then I'm also going to be looking at the bid, because now we can know what the premium attached to these are. So here for the biggest dollar amount in terms of the put, again, it's 143 here. So now we can figure out how much dollar flow there is here. We got roughly 2936, add 2 zeros, times that by 143. That's a $41 million order on Monday. Ooh, $41 million bear. Yep. All the way out to May. And a lot of people are now shifting their insurance to May and April. Here we can note that we got 2737, right? 00 times 305 for this strike right here. 4,400 for September 16th. That's $83 million. Oh, wow. That's pretty big. In terms of bulls, again, here we got an order for 2051.00 times 166. This order here is worth about $34 million. So we're starting to see that the bears were taking pretty strong control on Monday. They're like, we got this, we got this, we got this. I don't know. Not really all that impressive. So again, here we can note we got pretty big bear flow again, going to be like roughly 50, 60, 70, 80 million bucks. And into Tuesday, as we open up the month and set that low on S&P, they were still buying puts. All right, cool. Looking forward to Wednesday. On Wednesday, boom. This is where the bulls come in. Look at this. So 4,600 for April, 43.50 for April, 45.50 for April, 45.20 for March. Interesting. There's still the bear flow here. It's notable, but we can see that the bulls are actually starting to start buying again. And again, this individual order here, 2327 times 00 times 161. That is going to be an order worth roughly $38 million. That's pretty big. Looking here to Thursday, here's where we start to see the bulls and the bears fight it out more. Again, they're buying puts all the way down to 2,300. I think that's a little bit low, probably just collecting premium, but we're seeing more calls than puts. The biggest dollar amount is going to be for calls. The volume is going to be on the call side. It's very, very notable to me. The bears are still buying, but the bulls are finally actually showing up and putting significant dollars to work. Then we look here at Friday, flip back to bear, where the biggest orders are now bearish again. So if this confuses you, what I'm trying to say is that the options motivation is there. We have OPEX coming up on March 18th. The bulls and bears are both motivated to buy out of the money right now. And we close with the doji. So where we open up the week and whether we take out the high of the week or the low of the week is going to be very important for me. All right. So I am cautiously optimistic that sometime in the next 3, maybe 4 weeks, we're going to find a bottom and potentially start advancing into April. If you are worried about where we're going to go from here, please rewatch the video because I laid out a very clear plan for what the bears need to do and what the bulls need to do to claim victory on the charts. With that said, I wish you all the best of luck this week. And if you wouldn't mind smashing that thumbs up and dropping me a comment, that would be great. If you missed the video regarding the key dates of the week, that'll queue up here in a moment. And I encourage you to watch that one as well. Thank you for watching.